Punita Kumar, managing partner at Pacific Paradigm Advisors, joins in on the show. Punita, hi, morning. First, let's describe the current market environment. There's not much to look forward to on the policy front. We've seen, we've been negatively surprised by the trade deficit numbers as well. And that's had its consequential impact on the rupee as well as liquidity. Does all this make for a high risk of a downtrend in Indian equities from the current levels?
After the first quarter rally, the markets haven't really done anything, primarily for all these reasons, right? Because the budget didn't report any positive surprises. The policy front continues to remain challenging. And I think that we are entering a weak seasonal summer sort of period where equity markets generally in the past haven't done well. So for a very short-term perspective, that's always a possibility. But I think that the pressure on the government is mounting to do something. And I hope that come second half, things would have improved.
Sunita, what are your thoughts on inflows? Because that in a sense or global liquidity in a sense has been the prime driver for Indian markets this year. Do you think things are now looking slightly sticky, especially after the GAR fiasco?
Well, a lot of investors who have been looking at India for a long time obviously are concerned. But there are investors who have missed India in the past who are taking another look at India and are waiting to allocate more to emerging markets and India. And I think that they're just waiting for attractive entry points.
Punita, the final notification on GAR is going to come out on May 7th. What stand do you think the government will take, and what do you think the markets are watching out for in terms of a texture on that note?
I think if you look globally, people are coming to terms, investors are coming to terms with the fact that the tax systems worldwide are seeing the pressure for increases in taxes across lots of things, whether it's withholding taxes, exit taxes. Generally governments are trying to protect capital from moving out of their countries. So in that light, I think if India's, puts all these taxes for investors, I think people will probably come to terms with it and accept it. But what would be very unsettling is if this is done on a retroactive basis. So that would be something to watch, and the uncertainty that the tax policy making is kind of creating right now has to be resolved.
So Punita, what is your directional call on markets for near term and then for medium term?
It's very hard to say what will happen short term. All I know is that there's plentiful liquidity and the alternatives to equities, at least globally, are not very promising because credit and fixed income has already done quite well. And so people are, looking to put money more into equities, and as a result, I think at some point emerging market equities also become an attractive destination, and India also becomes a beneficiary. So I think given that loose monetary policy and easy liquidity coupled with hopefully improving interest rate and inflation and situation in India at some point, I would think that while there may be a correction short term, I hope that the second half would be better.
So, Punita, sectorally, what makes you bullish on financials, considering policy remains on the back foot? RBI has limited headroom for further rate cuts. The recent run-up in banks already has been done with, and NPA concerns continue to loom large.
Actually, if you see the earnings which are coming through, they have been mixed. Some banks have given very good growth in earnings, and some obviously have not. I think generally as interest rates come down, the economic activity will pick up in the country, and banks will be a beneficiary of that because their credit growth will also improve, and as the economy improves, hopefully their NPLs will be getting better. The NPL provisioning and the situation will get better, and I think generally speaking, any interest rate sensitives would be something I would look at, because those are the ones that have been beaten down the most in the last few years.
Rita, what about the global picture? Do you think central bankers will continue to follow a low interest rate regime and they will infuse more liquidity? Because if one looks at Europe, especially in Spain, austerity measures are not quite working out well.
I don't expect that there will be another round of liquidity infusion, into the various economies and the markets. But I think that the liquidity that's already there is seen as helping, at least in the U.S. and I think in certain other countries. So I think the liquidity and low interest rates are going to stay for a while, and that will generally help companies do better. And we've seen that come through in the results of many of the U.S. companies where we've seen, decent pickup.
So, Punita, what happens if there is a QE3 in the U.S.? Will India stand a chance of performance, and will that money trickle into our market?
I don't think India is a direct beneficiary necessarily of QE3. I think it's sort of more, it's a sentiment factor that might help people put more money generally into equities, more money generally into emerging market equities, and then through that into India.
What about earnings, Punita? How would you really characterize the earning picture for the quarter gone by?
Equities in India are reflecting a lot of negative news, and as you can see, every time a company that reports a positive surprise, the stocks are really going up sharply. That's indicative of the fact that the valuations were not factoring in any positive news. So whether it was ICICI Bank, Bank of India, TCS, those stocks have gone up very sharply after the results. Similarly, of course, the markets are not factoring in that very well-run companies would disappoint in this environment. And when we've seen that happen, also stocks have fallen sharply. So I think equities, there's a lot of uncertainty in people's minds, and that's why the markets have been where they have, and that's why when earnings surprises are coming, markets are reacting very sharply, both positive and negative.
Punita, what about consumption-driven stories? Is the outperformance in autos and FMCG here to stay?
I do think that the autos and consumer themes are here to stay in India. It's a long-term secular trend with the very good demographics for India. That's really a key driver to the Indian economy, and these companies will continue to see increases in their top line growth. Of course, there could be margin pressures depending on the economic cycle you're in, and there could be other company specific factors, and of course one always has to look at valuation, particularly the FMCG sector. But as a theme, I think it's a theme that's here to stay.
Punita, what are your thoughts on telecom space, given the way how policy uncertainty will continue to dominate the telecom sector for next 2 or 3 quarters?
Well, I had said earlier that I would avoid the telecom space, not necessarily because the companies are not doing well. It's only just as an investor, you have to choose the areas where you think there is more certainty, and anytime there's a lot of complexity and uncertainty around any sector, it just takes a lot more analysis to be able to sift the good from the bad, and therefore I have just chosen to avoid the sector right now, and I don't know where this will eventually end up at, and instead of having to follow day to day the regulations in great detail, I just didn't invest in the sector.
Punita, finally, what about IT? Because that's been a mixed bag and a company-specific story, with Infosys on one end and TCS on the other. Are you bullish on the prospects of the sector?
The IT sector is a sector that is seeing the same trends in the US as well as what we've seen here. Mixed results, some companies reporting really good results, some not so good results. As a result, last week the technology volatility index in the US was trading at a big premium to the volatility index, generally showing that there's a lot more uncertainty around what the earnings will be in the sector. So I think anyone who's, I believe the companies that have more exposure to the financials sector have seen a lot more mixed results than others. And I think, it is again, as a sector, we are seeing things becoming very company specific. So clearly it's not just a sector issue. It's the sector itself is doing well, but the companies have to be able to tap into those opportunities.